Good morning, everyone. January the 4th, 2016, the new trading year begins. We open this morning with stock markets down around the globe, equities. Their selling is blamed on weak Chinese manufacturing PMI numbers, Iran, the Shia-Sunni shrift or schism, or line in the sand has been breached. Saudi Arabia executed a Shia cleric at the end of the year. It set off riots in Tehran. The Saudi Arabian embassy was attacked, and some fires were started. I don't know the extent of that. Saudi Arabia and Iran have now severed relationships, so tensions in the Middle East are higher. This Arab Spring that the United States unleashed on the world, I mean, stuff is coming apart, it seems. That's impact on equities. Markets do not like uncertainty. The chances for all-out war in the Middle East just increased. No doubt Saudi Arabia will be increasing its help to ISIS indirectly through Qatar and the Persian Gulf states. And Iran will probably double down on its efforts in Syria, which have not been very successful to date. So tensions in the Middle East are going up, and the price of crude oil really doesn't reflect that supply will be interrupted. So we have commodities still headed down. Stock markets have been selling into the end of the new year. That's pretty unusual to have that kind of selling. We have tensions in the Middle East pointed higher. The markets do not like the drumbeats of war. After the war starts, stock markets can come back, but they usually are sold into it due to the uncertainty associated with war. So that's how we're going to open up 2016. I think the key for our markets today is, what is the Fed's response going to be? And our economic numbers are starting to get worse and worse and come in well below the forecast. You have to wonder in the back of your mind, what was the Fed thinking when they raised their interest rates, other than it's time to save face. So here we are. So what we have, and I'm going to separate these out, this quite often the W and X set the high or the low before the day session opens. And while I do believe there is a long left in treasuries, it's all going to boil down to the Fed's response. They jump in and support the E-mini this morning. We do have some news that can impact the trading. But if we can't get through 126.16 and hold it, then I think treasuries will become a sell. Okay, the news that we have today is PMI manufacturing lower than last month at 51.1. Downward trajectory. ISM higher than last month's at 49.2. Was 48.6 last month, but still below 50. Right before the elections in August of 2012, they started manipulating this number to fit the administration's song. They saw what had happened to the S&P 500 group company. It wasn't going to happen to them. Construction spending up 0.7, and then Gallup consumer at spending per day comes out at 2 p.m. and it was $92. So the news focus is ISM manufacturing 49.2, followed by the Fed, and we'll see if the Fed's going to come in and buffer the selling or not before the ISM number hits. So the easiest trade to see is sell failure to take out 16 to 20. And hold it. Then 23 to 27, going to be down to what the E-mini does. On the buy side, we've got pretty good support here in the 6 to as high as 8 area. So buy is 5 to 9. And we do have to take out 16 and hold it to stay long. And then 29 to 01 for buy 2. Looking at the ZB. And again, I'm going to separate out W and X. It's really key if we can't get through that. A lot of the excess is wrung out of the markets in the overnight session for two reasons. One, lack of liquidity, and most of the operations that are run around the globe are market making operations by the primary dealers. Our 5 banks deemed too big to fail, etc. So failure to take out 24 to 155 even and hold that is going to be key. So sell 1 is going to be sell failure to take out 28 to the buck, and it might be as low as 24. All hinges on what the E-mini is going to do, then 7 to 11. We'll pick up this area right in here for sell 2. Pretty good support down at 54.06, then 54.09, and 54.16. So we'll make 13 to 9 buy 1. And then if we bust that, 29 to 01 for buy 2. And if the Fed comes in and buys the stock market across the board, remember, the United States is the dog and the rest of the world is the tail. So the Fed's support for the market, I think, is going to be critical today. Left on its own, the stock market would be a lot lower than it is today based on fundamentals. But it's not. The Fed does come in and outright support the market, so we'll see how much their commitment is to maintaining and keeping the stock market where it is. Okay, looking at gold. Gold's up quite a bit, having trouble. Remember our 80 to 85 was pretty stout resistance. Right now, resistance is at 75 to 80. So 74, 76, sell 1. 79, 81, sell 2. On the buy side, we had the breakout from Globex at 66, so 66, 67 buy 1, and then 60, 62 buy 2. If the stock market sells heavily, gold should continue to rally. The stock market does not rally today. We've seen the high, in my opinion. Okay, the yuan was off 0.6% overnight. China is going to do everything they can to maintain what market share they have. The hopes have been that China develops a middle class that will spend China out of its manufacturing slump internationally. Hasn't happened yet. So 950 to 975 is prime sell territory. Sell 1, 50. Sell 2, 75. On the buy side, we had the extension on the Globex at 87. We're at 21, so 109 even, buy 1. And 75 will be buy 2. European manufacturing PMIs were all higher than forecast by 1/10 to more. Only France's manufacturing PMI came in lower than forecast. And the sum total of all of their manufacturing PMIs raised the European Union's manufacturing PMI 0.1%. So a lower euro has helped their exports for sure. And that is according to plan. Okay, crude is not displaying normal activity for all the tensions increasing in the Middle East. I guess they're figuring out that maybe Iran and Saudi Arabia will continue to fight a proxy war and it won't go hot just yet. So 38, 38 and a quarter, sell 1. 38.50, 75, sell 2. These tensions will probably put a floor underneath crude. 36.75, 37 by 1. And then 36 and a quarter, 36.50 by 2. And last but not least, the E-mini. The E-mini is going to offer us unusual opportunity, I think, as traders, watching what goes on in crude, watching what goes on in the 30-year and the E-mini. Occasional peek at gold and sometimes the euro should give us a pretty good trading repertoire. And the E-mini, it's really going to boil down to the Fed's support for the E-mini. So let's go back and take a look structurally at where we are. Based on fundamentals, the E-mini should be selling. It's higher than it would normally be under the current economic conditions. So it still boils down to how much will the Fed support the market. And you can see right here that 85 to 94 represents pretty good support. Then 74 to looks like 61. So this would be S1, 85 to a 94, and S2 looks like it could be as low as 58 to 65. It's where support is, and we've had some pretty stout selling. So definitely a seller above 2100. We've got a new move that started over the weekend, came right out of the middle out of this 20, 45, 46 area. So 2050 is probably where structural resistance is right now. We've got this dent at 32, 33. And if we got the low volume number down at 1945. So structurally, volume-wise, 1945, 1946 would be where we're headed. So 2050 to 1945 is 100 plus points, and that's within the grasp of the market, so to speak. It's there, and it wouldn't take too much to get down there. Okay, separating W and X once again. It's a good chance that the gun stops below 2000, and so we had our last rotate up at 5 to 750 areas. So sell one, and we got to give it some room today, is 5 to 10. And then we had the spill, London's high at 15, and we had the spill from K period. So then 13 to this spill from H up here, 17 will be sell 2. And like I said, have to give it some room just because of where the market is. Got the attractor at 07, so limit sell at 650. Structurally would be a trade. On the buy side, 95, 97, buy one. That's where support is. I think we could head a little lower. And then 89 to 91 will be buy 2. PMI manufacturing, 51.1. Dollar is hurting exports. ISM manufacturing, where the news focus will be today, greater than last month's, but still below 50 at 49.2. Everyone has pretty much accepted the fact that we're in a manufacturing recession. Construction spending plus 0.7. And then at 2, Gallup consumer spending per day. It was $92 per day, up from 89 the previous month. Down to what the Fed's going to do to support the markets today. Be back with you as soon as possible.